Welcome back. You're watching Midcap Radar. Markets in good stead. Nothing much to update about. It's been pretty much steady throughout the session, and Kotak Mahindra and Tata Motors continue to be the top gainers. There's been some selective profit booking. Hindalco is down about 2%, and some of the frontliners in the cement space, which has seen a lot of action in the last week, ACC and Ambuja both down about 1.5 to 2%. But one space that had seen a lot of outflows or maybe drying up of liquidity is the mutual fund space. Sadanand Shetty, Vice President and Senior Fund Manager at Taurus Asset Management Company, is now joining us. He handles the Taurus Discovery Fund, which is a mid-cap focus fund, and also the Taurus Tax Shield, which has been one of the good performers in their portfolio. Sadanand, thanks a lot for joining us. First question to you. What's the retail picture looking like? Are people looking to pull out, book profits, or are they lured by the rally and want to invest in SIPs at least at this point?
Good afternoon, Gautam. There is a signs of silver raise we are seeing ahead. We are seeing trickle of money coming across our funds, mid cap, large caps. There is a sense of belief is that tremendous opportunities there. It's not about timing the market. In a secular high growth market, you don't try to time for 5 or 10% kind of a market, because eventually mid-term and longer term it nets off the short-term corrections. So there is a sense of confidence, although we have not seen recently large flow of money coming into retail side, but we are seeing signs of improvement as we see money flow happening in various schemes.
Okay. Well, Sadanand, the mutual fund industry obviously went through its tribulations after the DSA system got kind of dismantled and the rules changed regarding how you compensate the exit loads. Has it stabilized after that? Are you beginning to see at least the early arrivals of money in a steady form?
At least at our side, we do see that happening. When you see the everyday data, we see a trickle of money across, large cap, mid cap portfolios keep coming in. I think the news is there out in the market that regulator want to clean the system. From their perspective, from the industry perspective, there is a huge opportunity to be made. Unfortunately, most retail investors have not participated. Perhaps one of the most quality rally in the recent time we have seen in the market, whether it's broad-based indices or the narrow-based indices, have retail investors have missed out. But that sense of missing out we are seeing in the market. And also there is an opportunity to be made in the market over the mid to long-term period. So that sense is we are seeing that happening in the market.
Have people at least started calling up in the last 2 weeks? I mean, at least after that 5,500 or 5,400 was crossed, are you seeing a return of the retailer in any form?
You see, basically our marketing and sales gives us a feedback, and from that perspective, there is interest being generated across market. That's something they are seeing incremental inquiries about several schemes, whether it's tax planning schemes or mid-cap schemes or large cap schemes. We keep seeing those signs of improvement, as I said earlier, happening in the market.
Mid-caps have given a lot of returns over the last 12 months. Is it a safe bet now, or is it the time to get out? Would you cash out of some of your investments?
Surely, as an asset manager, as a fund manager, when I look back and see, as I said earlier, it's one of the most quality rally in the market in the recent times. If you try and deconstruct the broad market, there are several components to this market. The clearly companies which has performed well, which has shown earnings growth, robust earnings have done well. If you look at the gainers and losers of this market, there is a big leap of faith the market has demonstrated on the government policy actions. If you look at the winners of this market in the last 3 months, is the companies which has partly got re-rated due to government policy action or impending actions, whether it's a fertilizer section, whether it's a media, whether it's a retail, whether it's a oil and gas. There's also another section of market which has done well, because we are going through another strongest M&A action currently, so that itself is unlocking value across many peer companies in the liquid equity space. On the return side, if you look at nearly 1/3 of BSE 500 has actually delivered return in the range of 200 to almost 100% return in the last 3 months. So of course, instant gratification is not always good for the market. So it's a time, in certain select counters one could book profit, something which we are seeing, across our portfolio. So wherever we see there is a price objective achieved within a short period of time, which is in a span of 3 to 4 months period of time, we are not hesitating, partly booking profit and taking cash home. At the same time, we are not creating huge cash in the portfolio, because we do see several other underperforming sectors or several other sectors where there are opportunities. We are clearly deploying some of those cash into the sectors which we think will eventually do well.
Actually, that is what, since you can't reveal stocks, what are you churning out of and what are you churning into in the mid-cap space, sectorally speaking?
I'll tell you what has done well for us, Lata, is, if you look at the domestic consumption, perhaps the domestic consumption has done very well. It's very rarely we have seen consumer durable hitting the charts. Companies which are direct and indirect beneficiary of consumption, domestic consumption has done very well, whether it's that's a tire, autos, liquors, breweries, watches, or partly if you look at hotels or airlines. There is a strong momentum going on in the domestic consumption sector, which we think could emerge one of the biggest investment theme in the near future, maybe over the next 1 to 2 years period of time. We have a significant allocation to that sector. We also see a companies which are getting benefit of policy actions from the government. We have seen several companies in India which have been making profits out of the regulated business, where the profit composition of those companies are changing over the period of time. Now they are able to generate a return out of the deregulated business, which actually calls for a derating of such companies. So clearly we are betting on domestic consumption company, we are betting on our oil and gas sector. Within consumption we also look at the banking sector. Consumption sector itself has a wide variety of sectors within India, particularly in the mid-cap space. We are betting on those sectors. And wherever we have seen some of those returns were very large, phenomenal, and as I said earlier, nearly 1/3 of BSE 500 companies have delivered return in the range of 20% to 100%. Wherever we have seen such a large return, we are kind of partly willing to take home the money. At the same time, we are deploying the same amount of cash in other segment of economy.
All right, Sadanand, we would have loved to ask you a lot of questions, but we're running out of time. So thanks a lot for joining us.